Rotus, take it away.
All right. Thank you, Rufai. Thank you, Ayo. Good morning, everybody, again. All right, real quick, we start with Asian markets, and they've opened up in a mixed bag this morning. You can see the Shanghai Composite Index in mainland China up by 53 basis points. Your Nikkei 225 in Japan, which did pretty well over the last few weeks. In fact, so far this year, down by 177 basis points. The Kospi is down. Your Hang Seng is up. Your S&P ASX 200 in Australia is up. There's a lot of data that the markets are going to be looking forward to with respect to what to expect this week. A lot of it is earnings. A lot of it is on the retail side and on the tech side. So if we take a look at what to expect later today, Palo Alto, which is a cybersecurity firm, is going to be releasing its earnings. We've seen what's happened with CrowdStrike and how cybersecurity has been at the forefront of the headlines in this past month. Also, Estée Lauder, the cosmetics giant, they're also going to be releasing their earnings later today. So with respect to Estée Lauder, and as far as the cosmetics industry is concerned, how is the retailer being impacted? U.S. retail sales were pretty good last week. They beat expectations from Wall Street. So is that going to feed into the earnings from the retailers? On Tuesday, we get Lowe's. We had Home Depot last week. We had Walmart last week. That Walmart did pretty well in terms of beating earnings expectations. And then Federal Reserve Vice Chair for Banking Supervision, Michael Barr, he's going to be speaking tomorrow as well. So in terms of interest rate direction, monetary policy path for the United States, we'll be getting that Wednesday. Earnings. Target, or Target, if you want to be fancy, will be releasing their Q2 earnings. Snowflake, which is a cloud computing company, will be releasing their earnings as well. Zoom, which everybody uses, right, will be releasing their earnings. They did pretty well during the pandemic, but then fell back down. And then Macy's. So again, it's technology and retail sales. Retail that's going to be dominating earnings. Then Thursday, we get the initial jobless claims from the U.S. How many people are filing claims to get unemployment assistance? This, of course, is going to be happening right in the middle of the Democratic National Convention. I think Kamala Harris is going to be speaking on Thursday as well. So interesting to hear what she wants to say about the labor force, creating jobs, and reducing costs for everyday Americans. Friday, Wyoming, Jackson Hole. We're going to be hearing from U.S. Federal Reserve Chair Jerome Powell. He's going to be speaking. Everybody wants to hear what he has to say about the meltdown that we saw last week. Temporary. Markets have rebounded since then. And then whether or not he's going to give a further clue as to what to expect with respect to monetary policy path of the U.S. Speaking of the Fed, Mary Daly, who is the president of the San Francisco Federal Reserve, she granted an interview to the Financial Times over the weekend, and she said that there should be we should lower rates. So we should gradually get to a stage where interest rates can come down in the U.S. A couple quotes from what she said. We take a look at some excerpts in her interview with the Financial Times. She said, after the first quarter of this year, inflation had just begun making gradual progress towards 2%. Rufai mentioned this earlier. We're not there yet, but it's clearly giving me more confidence that we are on our way to price stability. And then she also talks about gradualism, and that is easing your way down to a soft landing. She says gradualism is not weak, it's not slow, it's not behind. It's just prudent, a prudent, efficient way to getting the country down to a soft landing. The U.S. labor market, while slowing, is not weak. Commodities. Steel, or rather iron ore prices have been falling, and they are impacting the global steel industry and a number of companies around the world. If you take a look at this chart, iron ore prices, I think about $96 or so. The two red circles you're seeing there, the first one to your left in the middle was about November 2022. That was the last time we saw a major drop in iron ore prices. And then all the way to your right is the most recent prices. So about a little bit, you look at over 150 from 2021, coming all the way down to under 96. Now, what's going on here? If we take a look at the top 10 global producers of steel, I mean, China is not even close, right? 1 billion tons. You've got India in second place at 140. Then you've got Japan, the USA, Russia, South Korea, Germany, Turkey, Brazil, and Iran. You are basically seeing a situation where there is too much. Well, one, China's demand is falling because of the property sector and the issues that are faced in real estate. So construction is slowing, which is reducing demand for iron ore, which is key for steel. And so where China goes is where the industry basically goes because of the size of its manufacturing sector, how much it demands. And then also there's how much it exports. So there's this over capacity issue that you've seen with electric vehicles and so on and so forth. That is impacting other steel makers around the world and could lead to job losses. So that's the commodity that we're facing. Since we're talking commodities and we're talking oil and NNPC and fuel and so on, natural gas in the US, we saw a big drawdown in the United States week on week for August. This is the first time we've seen a drawdown as far as inventories in the US falling into the negative region. We've got a chart to show the week-on-week natural gas stockpiles for the United States, and you'll see that it falls for the week of August the 9th of 2024, falling into the negative region. This is in billions of cubic feet. So essentially, this summer, this is a climate change story here. The US is facing a very hot summer. You've got more people demanding gas, which is putting pressure on the grid in order to basically cool their homes. Finally, I mean, we've already talked about this, the cable story, the NNPC, the fact that, subsidies, dividends are being paid to augment fuel subsidies. It is wasteful spending. You need to deregulate the downstream sector. And I am going to be very curious as to what price, in terms of PMS, that the Dangote refinery is able to sell in order to recover their costs. Diesel is deregulated, so there was no problem in Dangote refinery pushing out diesel, and you saw prices being impacted from 1,004 per litre coming out to 1,001. This subsidy, unless the federal government says, hey, Dangote, we will pay you the full price of your cost to take out PMS, that's the only way I see this happening, because as a capitalist and as a business wanting to make money, that refinery is going to want to sell PMS at its open market price. And by the way, we had Bismarck Rewane, Managing Director, CEO of Financial Derivatives Company Limited, on the Global Business Report on Friday. He estimates that the open market price of fuel, PMS, will be about 1,200, which is where we're seeing this inching up in parts of the country. That's our update for today.
So a couple of things. As regards the NNPC, see, the truth is you might call it wasteful spending, but I disagree.
Okay.
This is me that have bashed the NNPC all this while, but I'm talking like a nationalist as a statesman here. Every country in the world makes some sort of painful concession to its people. You might say it's been stolen and all of that, but this is the only concession probably that the Nigerian government makes to its people to be able to stabilize the rate of things. We've seen the harmful effect of when the announcement of the subsidy removal was done. So if the NNPC is saying this and going this route, they're not remitting, if this is the only, I think what we can just ensure is that the system is not corrupted and we have true forensics to be able to ascertain what is truly going on there. As regards Dangote refinery, to a large extent, some costs like the freight cost will also be eliminated when it comes on stream. But if they can also put them under that direct sale quota of 450,000 barrels per day, and they get some of the fuel there and they're buying in Naira, also the currency swap variation cost will be removed. So it should have a great impact. And that's why you saw that Dangote refinery was selling diesel less than what the other marketers was bringing it in. It was when the currency started to go up again that the price went up. So marginally, I think it would be a whole lot better.
All right, just very quickly. I mean, we're going to still have that conversation around, the oil prices and also with the Chinese company as well. I think that was one thing I wanted to highlight. We have a guest coming in later on, and hopefully he will be able to break down, because there's a lot of back and forth. And like what I said last week, my concern is, number one, owning of contracts, what the signal it sends to investors. And you saw, I don't know if you saw the X posts by Patutomi and how that affected a South African business investor in Nigeria because of what had happened with his own contract, separate from this particular deal. Yes, I was going to say, even though the Ogun State Senator Ibikunle Amusu had come out to refute his allegations, saying that he had, there were issues around his application for that land. But a number of things, and like I said earlier on, we are going to have that conversation robustly with, Mr. Aundaka. So looking forward to that particular conversation. I thought you were going to talk about the fact that X has left Brazil because that's your guy.
Yeah, Elon Musk the man is a troll.
Because he cited the fact that he was under, he was being gagged in Brazil, so he's left.
Thank you so much, Ira.